Welcome back to We Here Now. I'm X. Let's get to it. So, in video three, how charts actually work. Now we're going to start talking about the backbone of the charts. All right. So, if you ever looked at a trading chart and felt overwhelmed, you're not alone. Most beginners see charts full of candles, lines, indicators, and assume it's extremely complicated. Like, I bet everyone thinks, all of these indicators on here is confusing. So, what I have is this is volume down here, this is the MACD, this is a fair value gap, a bearish, and then we have a fair value gap bullish right here, and then we have a 200 EMA right here, which is the red one. We have a 60-day EMA, which is the yellow one, and then we have a 30-day EMA, which is the green one. So, of course, uh, overspoke again. Getting too advanced. I'm just excited teaching you guys this skill. I'm just excited. So, let's get back to it. Let's see where. Yeah. So, but the truth is much simpler. A chart is nothing more than a record of transactions between buyers and sellers over time. Every candle you see is simply a summary of what happened during a specific period. And once you understand what each candle represents, charts stop looking random and start telling a story. All right, so let's zoom in a little bit so you guys can actually see the candles. And yes, this is a 12-hour chart. This is a 12-hour chart. So, yeah, let's get back to it. So, in the previous lesson, we talked about how markets actually move. Price moves because buyers and sellers exchange shares, and liquidity allows large participants to enter and exit positions. Charts are simply the visual record of those transactions. So, if you want to understand markets, you need to understand how charts display that information. I beg you, learn how to read a chart. Learn how to read a chart. Because if you cannot read a chart, it's going to be that much harder to understand, to become profitable, to understand how to do everything in this trading. To do everything. That's something that I've during my how I started to learn. That's one thing that I didn't see much of was stressing that you have to learn the charts, learn how to read the charts. So, what a candlestick is? Most modern charts use something called candlesticks. I say that because you have all of these things you can change the chart into. All of these, like this one. See, it's all the same thing, but it tells the story in a different way. Um, I like candlesticks just because I spent so much time learning about candlesticks, and now I know what I'm doing. So we have each candle represents four pieces of information about price during a specific period of time. You have the open. This for this green candle, this bottom piece right here is technically the open. You have the high, which is up here. You have the low, which is right here. And then you have the close, which is right up here. That's the close. The open is the price where that time period started, right there, because this candle stopped right here, so the next candle has to start right there. And this candle stopped right there, so the next one starts right there to come down. All right. So the close is the price where that period ended. The high is the highest price reached. The low is the lowest price reached. These four numbers form a candle. If the closing price is higher than the opening price, the candle is typically shown as a green or white. I need to take that out. Anyways, if the closing price is lower than the opening price, the candle appears to be red or black. Yeah, so the white and black, some programs uses different colors, but I know TradingView, this is the one that I use. As you can see up there, it's called TradingView. Their default is green and black. I mean green and red. Sorry about that. So this simple structure tells us something important. Who was stronger during that period of time? Buyers or sellers? Candle body versus wicks. A candlestick has two main parts, the body and the wicks. So of course the body is right in here, and then the wicks is the little lines. This one you can see it better right here. Wick, wick, body. The body shows the difference between open and close. The wicks show the highest and lowest prices reached during that period. Large candle bodies usually indicate strong participation. Strong bodies suggest indecision. Small bodies suggest indecision. Kind of like this. You know, when buyers or sellers don't know what they want to do. This is also can be called a doji. We'll talk about that later on. Large candle bodies usually indicate strong participation. Small bodies suggest indecision. Long wicks often show rejection. For an example, if price moves upward during a candle, but then falls back down before closing, you'll see a long upper wick. That tells you buyers tried to push price higher, but sellers pushed it back down before the candle closed. And that is also called a rejection. Let me find one on here. There's one right here. Price reject up here, all up here, and then boom, started to come down. All right, candles are order flow. One of the biggest mistakes beginners make is memorizing candlestick patterns. I did it. It helped me to look for patterns. It helped me to look for patterns. Now, I didn't memorize all of them because there are many of them. What I did was ask ChatGPT, hey, which are the main candlestick and chart patterns to look for? And that's what I started to try to remember. So we have a hammer. Let's see if you have a hammer. This is a hammer, shooting star, whatever. Don't get too much bent on the name of these candles. Just learn how to trade the candles. So you have an engulfing candle, which is basically this green candle because it engulfed the previous candle. Let's see if we can find a better one. I would say this red candle is a better engulfing, just because, as you see, the red started a little higher than the green, and of course, it went below the green as well. So it fully engulfed it. It fully engulfed it. And then, of course, you got the shooting stars, which is basically something like this or something like this. You can call those a hammer as well. But anyways, professional traders don't focus on memorizing patterns. They focus on what the candle represent. Like I was saying, remember, try to memorize on what the candle is and how to trade that candle. A candle is simply showing us the battle between buyers and sellers during that period of time. Large bullish candles equals strong buyer participation. Large bearish candle equals strong seller participation. Small candle equals balance between buyers and sellers. Understanding this concept is far more important than memorizing pattern names. Introducing time frames. Now here's where the charts become powerful. Each candle represents a specific time frame. For an example, a daily candle represents one full day of trading. A 12-hour candle represents 12 hours. Like this chart is 12 hours. So this candle is worth 12 hours of actual trading. Now, a little secret, on weekends like today, crypto is basically the only thing running and still until Sundays at around 4 o'clock, depending on your time frame that you are in the country. Forex opens 4 p.m. Sundays. However, crypto is 24/7. And on crypto, there's not a lot of participation volume on the weekends. All right. So a weekly candle represents 1 week. So let's look at the daily. This is 1 day's worth. Then you look over to the week. This is 1 week's worth. This is actually showing a reversal. This is actually showing the beginning stages of reversal. You will understand that later on. So yeah, I would definitely be getting into this trade if this was something that I was looking to trade into. All right. The only difference between these charts is the amount of time each candle contains. You can think of time frames like zoom levels on a camera. Lower time frames show more detail. Higher time frames show the bigger picture. Beginner time frame logic. When buyers first start looking at charts, they often jump to extremely small time frames. But smaller time frames tend to contain more noise. Higher time frames tend to show the true structure of the market. That's why professional traders usually analyze markets starting from larger time frames first. Then they can move down to smaller time frames to refine entries. This concept becomes extremely important once you start building an actual trading strategy. And you guys won't have to worry about that because I am giving you my exact trading strategy. Now, my time frames might be a little long for you, but however, this is what works best for me as I am, still working a 9 to 5. This Yeah. Then they move down to smaller time frames to refine entries. This concept becomes extremely important once you start building an actual trading strategy. All right. Now, if this, then that mentality. So here's some simple decision logic to remember. If candles have large bodies and consistent direction, participation is strong. If candles are small and overlapping, the market is undecided. If a candle shows a long wick rejection level, it may signal strong opposition in that area. I'm going to pause right there and basically show you something like that on the weekly. Well, this is the weekly. This is a strong rejection. Strong rejection right there. So understanding candles helps you see the behavior of the market, not just the price. So in the next lesson, we're going to expand on something we briefly introduced today. Time frames. Not all time frames carry the same weight. Now that is a key one. I'm excited to show you guys that one. That is a key one. Some time frames represent massive institutional capital, while others what a larger simply react to what larger participants are doing. Understanding how time frames interact is one of the most important concepts in professional trading. And once you understand that hierarchy, charts start making much more sense. All right. You've been watching We Here Now. I'm X. Again, if you want to keep learning about this job killer, I say job killer because when you learn this, you won't need a job. You'll just be looking for capital to put more money into the market. So I guess you will still need a job until you get to a certain point. All right. So you've been watching We Here Now. I'm X. Keep following me if you want to keep learning. I'll see you guys on the next one. Peace.